Hi, today's focus, letting your winners run and cutting your losses short. It sounds easy, many traders talk about it, but how do we actually do that? Today, some practical methods to implement this wise thought into actions. First though, please be aware that trading for exchange is considered high risk. Please pause this video to read this disclaimer, and by continuing watching this video, you're aware of the risk involved when trading. So there are two sides of the equation here. First of all, of course, we want the wins, the profitable trades to be as big as they can. And we want, of course, the losses to be relatively as small as they can. Many of us have difficulties accepting losses. This is a bias of traders that even a very small loss, of course, which in theory will not hurt our trading account if we use proper risk management. If we lose 20% of our original risk, that's a small loss, but it still stings. However, and hurts. But such a small loss is in fact not going to hurt our trading capital, or it shouldn't. So taking those small losses is in fact great for our equity curve, as long as, of course, we have winners that compensate that. And if you have small losses, you only need a decent win to do that. So we're going to talk about both sides. Now, letting the winners run, I like to use Fibonacci sequence actually in terms of pips, so not the ratio, not the Fibonacci target, but actually counting the number of pips and using fib sequences for that. So you see the pink line here and you see the purple line. The difference between that is 55 pips, and that is one of those sequence levels. I'm here on the hourly chart, so I don't want to show you all the sequence levels lower than 55 because those are basically irrelevant. Starting with 55 though, that's kind of the first sizable target, then 89, then 144, then 233, then 377. As you can see, those purple lines indicate basically the targets, and the spaces in between those are expanding as we go along the ladder of fib sequences. What I keep an eye on, and I basically calculate from the very first spot, the pink line, then I start to calculate the first, the second line, the third purple line. So it's just basically very simply, when I refer to the first line, it is the first line from the pink line. If I say the second line is the second line from the pink line. So let me write that for you down here. This is 0, this is the base, this is 1, 2, 3, 4, 5. So this is just an easy code for us so we know which level, which line we're talking about. When in my studies, I've noticed that price action starts to accelerate and show the most momentum when price goes beyond the second and especially beyond the third level. All right, that's the key. The third level is magical. As soon as price breaks above that or below that, of course, in a bearish momentum, then you see the most movement and the strongest pushes. So that's when, in my view, it's best to hold on to a trade and try to catch more pips, because that's the moment when I know that there's a higher chance that I can let my winner run with a safe feeling, with a good chance that the price will indeed extend far beyond what I had in mind as a target. So look at this example. You see acceleration from 3 to 4, right? And then you see eventually price getting up to the 5th. And it's from 2nd to 3rd as well. All right. So this is one example. There are plenty of other examples. Let's take a look at the next one right here. Moving on to the next low. I start basically the starting spot at the long-term moving average, basically where price is showing a bottom or a low at the long-term moving average, which is a 144 EMA close, right? Or if there is a bottom like this is also at the 144 EMA close. Or, of course, if there's a bottom, right? This bottom is the bottom where it turns. So I could use it there. That's one spot. I can use it there. It's a second. And then I'll use it here as a third spot. All of those are valid spots from my studies. So let's take a look at the next one. And you can see, yet again, acceleration between 2 and 3. Then again, acceleration from 3 to 4. And then from 4 to 5. So you can see how those spaces expand and how price moves into those spaces, goes to those targets very neatly, very quickly. So if you're looking for a bigger run, then you know that maybe when you take a long somewhere in here, that's not a good idea because the fifth level is close by. Same here. The fourth level is close by. Or here. The third level is close by. But along in here, after these engulfing twins, for instance, bullish engulfing twins, we know that price has space to the fourth level. And for instance here, bullish engulfing twins, we know there's even more space to the fifth level. So that's how one of my biggest weapons in letting winners run. So we're sharing that with you right now. Now, the great thing is that you can, of course, you could do this manually, but it does take some time and calculations, and unfortunately that might eat too much time. So what we did was make a script, and therefore all these lines are plotted automatically. So this is part of the tools we use, is part of our baggage that we have as arsenal, basically, as traders. And this is often we use, frequently you'll see these lines in the live daily analysis. So when you see these purple lines, you know why. All right? The second part is cutting the losses short. So let's take a look at another example. Let's put on these sequence levels first of all. And let's take a look at the downside. All right. Again, look at that acceleration from 2 to 3, 3 to 4, 4 to 5. But now let's talk about cutting losses short. All right. So let's say that I took a short here. Strong candle, for instance. The fourth level is broken, right? Let's count that together. 1, 2, 3, 4. I put the stop loss above the candle high, and I'm aiming for the fifth level. I personally don't think that's a great trade just because of the reward to risk ratio, but let's go with this for the moment. And you can see that basically price does go our way, but doesn't get to the target in one shot. And folks, this is something that happens, right? The market is not perfect. It will get there. Sometimes there are corrections, sometimes there are pauses. So we want to be aware of price misses just by 4 or 5 pips, like in this case, right? So you want to be aware of the imperfections and also adjust your take profit and stop losses and entries so that you're aware of that, right? That's why I don't aim for the very last pip. So it misses. One of the things I look for if momentum is still pushing or not is fractals. Fractals gives us an explanation of when there is a pause, when is there a stop. And there are no fractals here, as you can see. So this is a continuous push of price. There are no fractals here either, right? Not on the top of the candles, which is the bullish move there, right? So when there are fractals, that's indicating that there is a pause. There could be some correction going on. And especially if you have 5 to 6 candles pausing, then you will have that. So here you can see fractals giving us a warning. 5 to 6 candles right here, and indeed we get a bigger correction. So how can you cut your losses short with these fractals? Let's take a look at an example for such a case, right? So for instance, let's say I took a short up in here, right? Good pin bar there, retracing a strong candle, moving averages are aligned, so makes plenty of sense. So I'm waiting for the trade to go, and you can see pretty good, but it misses my target, and I was aiming for this 6th level, let's say. So how do I know when to exit, right, regarding fractals? So I see a fractal here, and I see a fractal here and here. So that's indicating that this particular momentum is running into some struggle, right? So 1, 2, 3, 4, 5, 6 candles, 5 to 6 candles is what I'm waiting for. If we don't get a lower low, then the momentum is indeed over. So that's one way of cutting the loss. Well, not loss in this case, but cutting the trade short, right? And getting some profit there. In this case, you can see that price indeed continued higher, so that was a smart decision. But the most important is to know that momentum keeps pushing. And if there's huge pauses, then you'll see fractals. And those fractals are giving us a clue that the momentum could be over or could be just pausing and later on still continues. But it gives us the opportunity to do some management of that trade. Let's say I took the trade here and I put the stop loss up in here, just an example. So how could I cut that loss short? By exiting here, because I know of the fractals that there could be a bigger correction. Or I can move the stop loss to above this fractal, for instance, right? Those give me opportunities to cut the loss short instead of hanging in that trade and probably getting knocked out right now with a full loss. Thanks for joining this video. Make sure to sign up on our website, elitecurrency.com, in the left upper corner, and wish you all great trading. Cheers.